Dan, first of all, I know that you set up the quarter itself was good, but the guide, based on some fundamentals happening with the economy and with education, you cut 7%. But I want to ask first about Chegg itself. What is the impact in this environment to the way you run your business? I'm thinking about costs, your cash position, any belt tightening. Are you watching operating expenses and how they might be growing faster than revenue?
Yeah, look, we've always had that discipline. And so it's a very difficult time to run any business because all the macro factors continue to evolve and almost none of them are in your control. However, within that environment, you can control what you do. So as you said, we brought our guidance down 7%. The reaction seems a little strong for changing the guidance by 7% and still growing. So we are growing. By the way, we do produce adjusted EBITDA of, I think we estimated about $250 million. We do produce 50 to 60% of that to free cash flow. So we are one of those companies that actually does grow and produces profits and produces cash. So we're in a very strong position to operate. Having said that, we have a challenge in the moment, given all the macro conditions that we talked about on the call, with the U.S. higher education market, where students are choosing to earn over learn right now. They're taking fewer classes. They're less academically rigorous. They're opting for more hours because there's more hours. And we know all of this is happening. We know all of it is temporary. The international business is growing. Our skills business is growing. So we're actually seeing really good opportunities ahead of us. So in this time, we are just very prudent in the short term. We invest in things that we're very confident will get an ROI, and we'll get an ROI soon. We're making those long-term investments in technology, the platform, the content for international growth. We're making it in our partnership with Guild, which is going spectacularly well to begin with. But in the U.S. market, we recognize that our efforts are in the funnel as opposed to the top of the funnel until the top of the funnel comes back. So we are being a little bit more prudent, a little bit smarter, but we are, I think, the only ed tech company in the public markets that actually produces adjusted EBITDA and free cash flow. So we have an advantage, plus we have $1.6 billion on the balance sheet. So, and by getting rid of the textbooks business as owning it, we no longer use any cash for that, and that will be margin accretive. So we think we set ourselves up, John, for exactly the kinds of questions you're asking.
Okay, and so that perhaps seals off some of the opportunities you might have looked to for further M&A in the near term, but does it focus your R&D efforts in a particular way also in the near term to set you up for, I guess, an acceleration perhaps out of this period, since you say you expect it to be temporary?
Yeah, so in the U.S., our focus has been on moving more people to the bundle over the basic package, which is $19.95 versus $14.95, which means the more successful we are in that, it's about $25 more a customer with pretty much all margins. It all goes to the bottom line because it's the same set of products that we're already investing in. So in that case, we're seeing record take rate of our Chegg Study Pack. That will mean for future years, every customer we have will be significantly more profitable. So outside the U.S., we're investing in the platform that allows us to present in local pricing, not only in local pricing, but local currency, and then local currency, the right price value equation for those markets. We have huge top of the funnel in India and Indonesia and Philippines and Mexico and Turkey. What we don't have yet, because we're just built it, is the ability to price at what the local price should be. That should accelerate our growth outside the U.S. And then our skills business, our relationship with Guild, they have a relationship with over 4 million frontline users. We are not doing academic support there. We're actually doing job skilling, of which cybersecurity is our #1 skill. So we see a lot of growth coming out of this just in the U.S. We got to be smart right now. That's all.